after this, we did see the Dow, for example, close more than 150 points lower. You're seeing plenty of action also on the crude markets. The rupee is strengthening against the dollar. Do you think that all of these is going to continue to have what is your impact outlook as far as the Indian currency goes? What is it that you are factoring in? Do we now have all of the information maybe to know what lies ahead, at least in the short term?
The current account balance, which is which was pretty comfortable at less than 2%, with oil at $70 a barrel or maybe even higher in terms of an average level for this year, we could actually see current account deficit going higher than the 2.5%, which is basically a red zone as generally is flagged out by the Reserve Bank of India. Now, the critical importance in this atmosphere is the capital flows, and we were continuously banking on capital flows, higher FDI, higher FPIs, higher ECBs, to actually sort of close the gap, whatever gap there was of the current account balances. Now, the current account has widened, as I pointed out, and on the other hand, unfortunately, the atmosphere in terms of the capital flows is relatively a lot weaker today. Yes, we still have a sort of carry perspective for India in the sense that Indian yields are relatively higher than, say, US yields. But we concern about the currency depreciation, which therefore reduces the attractiveness of India yields. So we expect weakness to continue in terms of the debt flows. Let's also not forget that we are sort of gradually heading into an election period, and given the overall weakening macro perspectives, there and due to the uncertainties that have been there in any election year, there could be some fence sitters in terms of people who want to bring money into India, including that on the FDI. So I think the relative atmosphere from the flows perspective is weaker, which necessarily means, and given the fact that the dollar has actually strengthened, and that too on a sudden and abrupt basis, we can actually see a relative depreciation pressure on the rupee from even the current levels. Something that we were not probably the market was not factoring in at around, currency was at around 63.50 to a 64 zone. So from this point, I think we still have a scope of the currency moving higher by the end of the year to around 67.50 to a 68 zone.
Indranil, hi there, afternoon. Amongst the factors that we will be monitoring globally, the Trump administration delegation is headed to China to negotiate the trade standoff between the two countries. What exactly are you expecting to come out of this, and how much of importance does it assume?
In terms of the sort of overall discussions, we'll have to wait and see, no doubt. But given whatever my understanding has been on the overall trade perspectives, I'm not really extremely sure in terms of an extreme positive response from both sides, which necessarily means that we are not really expecting the overall noise on trade wars to die out immediately. Now, immediately there might not be, from the pure trade perspective, might not be a very severe impact from the Indian perspective. But what really keeps me worried is that whether or rather we need to see whether this actually boils down to another round of aggressive devaluation of the Chinese currency. And if that is the case, then obviously the Indian situation in terms of the INR looks relatively worse than what we talked about. So I think it's still an evolving situation so far as the trade wars situation is concerned, and we really need to watch out that space.